Topic 7. Investor Communication. Investor communication is the strategic process through which an organization communicates its financial performance, business strategy, capital allocation policies, risk profile, governance practices, and long-term value creation plans to shareholders, institutional investors, financial analysts, lenders, and capital markets. Effective investor communication extends beyond regulatory disclosure and financial reporting. It is a critical leadership function that shapes investor confidence, corporate reputation, market valuation, and access to capital. For modern chief financial officers, CFOs, investor communication has become a core executive responsibility that combines financial expertise, strategic storytelling, governance, and stakeholder engagement to support sustainable enterprise value creation. Leading executive CFO programs emphasize that the CFO has evolved from a financial steward into the principal spokesperson for the organization's financial strategy and economic performance. Alongside the CEO, the CFO represents the company to investors, analysts, banks, rating agencies, and financial institutions, explaining how corporate strategy translates into financial performance and long-term shareholder returns. Effective communication strengthens market credibility while reducing information asymmetry between management and investors. The primary objective of investor communication is to build long-term trust through transparency, consistency, and credibility. Investors require timely and reliable information to evaluate organizational performance, assess strategic direction, estimate future cash flows, and make informed investment decisions. Organizations that communicate openly and consistently generally experience stronger investor confidence, greater valuation stability, improved liquidity, and lower costs of capital compared with companies that provide inconsistent or incomplete information. Investor communication encompasses multiple channels and activities, including annual reports, quarterly earnings announcements, earnings conference calls, investor presentations, annual general meetings, AGMs, investor roadshows, analyst briefings, regulatory filings, sustainability reports, and one-on-one meetings with institutional investors. Each communication channel serves different stakeholder needs while reinforcing a consistent corporate narrative regarding strategy, financial performance, governance, and future prospects. For CFOs, investor communication requires translating complex financial information into clear strategic narratives. Financial statements alone rarely provide sufficient insight into organizational performance or future potential. Investors increasingly seek explanations regarding revenue drivers, profitability trends, capital allocation decisions, competitive positioning, digital transformation initiatives, mergers and acquisitions, innovation strategy, sustainability priorities, and enterprise risks. Effective finance leaders explain not only what happened financially but why it happened, how management is responding, and how these actions support long-term value creation. A central element of investor communication is capital allocation strategy. Investors carefully evaluate how management deploys organizational resources through capital expenditures, acquisitions, research and development, digital transformation, dividends, share repurchases, debt reduction, and strategic investments. CFOs communicate the rationale behind these decisions while demonstrating disciplined financial management and alignment with corporate strategy. Transparent capital allocation policies strengthen investor confidence that management is maximizing long-term shareholder value. Executive credibility is fundamental to successful investor relations. Investors expect CFOs to provide objective analysis, realistic guidance, balanced risk assessments, and transparent disclosure of both opportunities and challenges. Credibility is reinforced when management consistently delivers on strategic commitments and communicates candidly during periods of uncertainty or underperformance. Long-term investor relationships are built on trust rather than short-term earnings performance alone. Investor communication also plays an important role during periods of strategic transformation. Digital transformation, acquisitions, restructuring programs, geographic expansion, sustainability initiatives, or major capital investments often create temporary financial volatility while generating future growth opportunities. CFOs must effectively communicate the strategic rationale, implementation timeline, expected financial impact, associated risks, and long-term benefits of these initiatives to maintain investor support throughout the transformation process. Risk communication has become increasingly significant in today's global economy. Investors expect management to discuss macroeconomic conditions, geopolitical developments, cybersecurity threats, climate-related risks, supply chain resilience, regulatory changes, technological disruption, and enterprise risk management frameworks. Effective CFOs provide balanced assessments that demonstrate preparedness without creating unnecessary uncertainty, reinforcing management's ability to navigate complex business environments. The growing importance of environmental, social, and governance (ESG) performance has expanded the scope of investor communication. Institutional investors increasingly evaluate sustainability strategy, climate risk management, human capital development, governance quality, diversity, ethical leadership, and long-term stakeholder value alongside financial performance. CFOs therefore integrate financial and non-financial metrics into investor communications to demonstrate sustainable enterprise value creation and responsible corporate governance.
Digital technologies have transformed investor communication through real-time financial reporting, integrated reporting platforms, virtual investor meetings, artificial intelligence, advanced analytics, and interactive data visualization. Digital channels enable organizations to communicate more frequently, improve transparency, and engage broader global investor communities while supporting data-driven discussions regarding performance and strategic priorities. Successful investor communication requires close collaboration among finance, strategy, legal, sustainability, communications, and executive leadership teams. Consistent messaging across all stakeholder interactions strengthens organizational reputation while ensuring compliance with regulatory disclosure requirements and corporate governance principles. CFOs play a central coordinating role by aligning financial reporting with strategic messaging and stakeholder expectations. The Global Competency Framework identifies communication, strategic influence, leadership, governance, corporate finance, stakeholder management, integrated reporting, and business partnering as essential competencies for executive finance professionals. Modern CFOs are expected to communicate effectively with investors and capital markets, explain financial and strategic performance clearly, strengthen organizational credibility, and support long-term enterprise value creation through transparent stakeholder engagement. In today's global capital markets, investor communication has become a strategic leadership capability rather than a regulatory reporting obligation. Organizations whose CFOs communicate with transparency, strategic insight, financial discipline, and credibility are better positioned to attract long-term investors, strengthen market confidence, improve access to capital, and support sustainable enterprise value creation through effective executive influence and strategic partnering.